Hi there, everyone, and welcome into this week's market update. Don't forget that any advice contained within this presentation is general only, so it isn't tailored to your particular circumstances. You need to decide for yourself whether it's appropriate to you. Okay, so our market finished off a strong day today, but couldn't really make any new ground above 7,200. So 72 is kind of the highest we've traded to for quite a long time, probably going back to what, June this year. Okay, so it's been a while. Momentum still slightly up, but it looks like it's died right out. Okay, so we had some fairly strong upward momentum in this trend, but now we've been a bit more than a week of really sideways movement, stuck between about 72 and 71. At this point in time, we're just waiting to see which side this is going to break out to. If it breaks to the upside, 73 is the next key level to the upside, and then to the downside, 7,000 would be the key target. That'd be sort of short-term targets, and we'll see what happens beyond there. To me, this market's sort of a week-by-week market now. There's so much going on in the background, and really just waiting for news to arrive. I think, coming into November, we're fairly bearish, but after the last CPI and Fed meeting, obviously we've seen a clear change in mood of the market, and we're just a little bit unsure whether that mood's going to hang around or whether we are going to see another sizable pullback. Really, that's going to come down to how data arrives in the next few months. So in between now and then, I suspect a bit more of a sideways trading market, probably back to seasonal patterns. So tend to sort of see a strong November, pull back late November, December, and then rally into Christmas, right? So I suspect a pullback coming soon, especially with markets looking so overbought. S&P 500, very similar sort of action happening across there, but I think our markets are, maybe perhaps outperforming a touch, okay, in the short term, in the very short term there. They're stuck, S&P 500 stuck between 4,000 and 3,900. You can see a short-term uptrend starting to begin. A few little reversal patterns coming into play, so double bottom, inverse head and shoulders. The double bottom really doesn't get confirmed unless 4,300 breaks. That's a long way away. Still inside the downtrend, so pennant's approaching. We're getting closer to the edge of that pennant. And as we normally sort of get into these types of patterns, the movement up and down becomes very small. Okay, and I suspect we're going to sort of hang in this little pennant pattern up until maybe the middle of December. Right, so I do suspect a lot more sideways sort of action whipping us around in the short term here. Really looking on the horizon, there's not a lot to drive markets up until the middle of December, where we get the next Fed meeting and where we get the next CPI reading, all in the same week, right? So I think it's around the 12th or 13th for the CPI, and about the 15th for the Fed. So that's what we've got to look forward to, but that's still 3 weeks away, right? So still plenty of time. So Thanksgiving this week, guys, that means that markets are closed in the US Thursday night. They'll reopen for Friday night session, but it will be a short session that usually gets pushed around on very light volumes. So I believe they close at 1 p.m. their time. So that'll be early hours of the morning for us, okay? So all in all, guys, look, these types of weeks are usually pretty quiet. I had to look back in the last sort of 6 or 7 years of data back to 2015 this morning, and basically what I found was the average movement on the day after Thanksgiving is about 0.6%. So I'm not expecting a big move at all Friday, and the day after that's usually fairly small as well. Although last year we did see about 2.2% fall on the day after Thanksgiving. So look, it can happen, but the law of averages suggests that it'll be a fairly small movement on Friday. Look, news-wise, between now and then, we'll have Fed minutes Thursday morning, okay, our time. So that will react to the market, their Wednesday night session of the market. There's a few data points through there. Outside of that, there's not really much else happening this week, guys. Okay, so a bit of data Wednesday night, Thursday morning, okay, which should be the last night of trade until Friday. And really won't see a real session out of the US again until Monday afternoon next week, right? Or Monday night, I should say. Okay, so Thanksgiving this week, guys. Okay, so lighter volumes and tend to sort of just whip around. Okay. Now, the big question is, which way would the S&P 500 break, right? We're getting to the edge of that triangle pattern, okay, or the pennant pattern. Break to the upside, then we'll get a further rally up, obviously. A break to the downside, I wouldn't be surprised if it goes all the way back down to the yearly lows. Now, really think anything's on the table here, guys, right? And that's the thing in this market now. There's so much uncertainty. We're kind of like, I think coming into November, we were fairly bearish, okay, for good reason. But now we're starting to see CPI top out a little bit. There's a few things to be optimistic about. I do believe that optimism will only last so long. Okay, at some point the reality is going to kick in. Okay, 2013, 2023 next year, everyone's predicting a recession. Now the question is going to be: is it going to be a hard landing or a soft landing? All right, that's the big thing for markets. If we start looking like we're going for a hard landing, or if interest rates are going to go up much higher than what people are expecting, that would have to mean inflation isn't coming down. They're all reasons to be fairly bearish the market, and a retest for the S&P 500 down at 3,600, I would not be surprised at all. At all, okay. I think that is definitely on the table. But for now, the momentum's up. The mood out there's okay, right? It's definitely improved. Volatility's fallen dramatically from where it was. The VIX index is back down near the low 20s. I suspect that's going to fall further in the next 2 weeks. So everything to me is pointing sideways to up in the short term, although very overbought and dual pullback. So yeah, look, if I put some money on it, I'd be saying at the moment a little bit of sort of sideways to upward movement, a pullback coming soon, and then a rally into Christmas, depending on how the CPI reading and the Fed meeting in December is received. Outside of that, really, what's worth a mention is probably two other things. One is obviously relationship with China seems to be improving a little bit, as we saw Biden and also Anthony Albanese meet with Xi Jinping at the G20 meeting. That really has provided some optimism around exporters here. Miners have done pretty well. So there's some positive news there. Let's see where that goes, okay, and see whether we get a little bit more geopolitical risks again next year. Miners pulled back over the last few sessions on the back of COVID zero worries in China. So there's so much mixed news out there, guys, right? I see some positives, I see some negatives, but what I do see is still a massive risk to markets, and that is interest rates having to go up much more than what people are expecting for a longer period of time. And what markets are telling us is that interest rates are going to sharply come down probably around the middle of next year. And I don't think that's the reality. So I think the market next year will have to have a reality check, and how severe that reality check will come down to will really come down to data, right? It'll come down to inflation data, come down to economic data, and how bad will this 2023 recession be? Will it be just a light recession, soft landing? Then inflation comes down, we're all good, stimulate, and we go again. All right, or is this going to be a long entrenched process to bring inflation down? Is it going to take a couple of years to come down? Are we going to see interest rates up higher for longer than what most people are expecting? And if that becomes a yes answer, then markets will fall again. So I think we're on this pendulum where it could go either way, right? It could get very positive or very negative, and we've just got to watch for that news, okay, on inflation, on the Fed, on economic data. Keep weighing it up each month, keep an eye on things, and just see if things are going to get nasty again or not. So, but that can take 3-4 months to play out. In the short term here, okay, what have we got? We've got no real big news up until the middle of December, right? Yes, we have Fed minutes in a couple of days' time. That's just November's meeting. Who cares, right? I'm really not too phased about that. We might get a little flurry in the market up or down 1%. Who cares? What I'm talking is the next big move could happen middle of December. I think sort of everything comes to roost then as well, because we'll probably find out who controls the Senate by then as well. So there's a kind of few bits of information there, but yeah. So really for me, between now and middle of December, a bit of short-term fluctuations. Markets overbought, so probably go up a little bit more, fall down. And then the middle of December is going to make a big decision on how big a Christmas rally we're going to have. If the Fed sets up something positive, if the CPI reading comes in lower, we'll have an almighty big rally over Christmas. Okay. Or we might have a very subdued Christmas if the Fed has to go really hawkish again and that CPI reading comes in higher than expected. So they're the variables, right? So there's going to be a lot of variables in the next 2, 3, 4 weeks as we approach that Christmas time. All right. But yeah, so look, everything's up in the air, guys. There's no certainty out there for me. I think there's massive risks to the downside for equities still. That hasn't gone away. And until inflation comes back down and central banks are able to stimulate again, there's a massive risk over equities. We have had a safety net blanket under this market since the GFC, and that's been QE. QE. So that safety net. Yeah, every time the market falls, they QE their way out of it. This time they can't QE their way out of it, guys. They can't stimulate their way out of this one, right? And that to me is a massive, massive risk for equities markets. But it's all timing, okay? In saying that, the market could go up another 10% before this reality kicks in. So don't be afraid of going long the market. But what I'm saying here is this is not a market where you just buy and forget. This is a market where you've got to use some technical analysis. You've got to get in and be prepared to get out or hedge when things are starting to look a little bit nasty. All right, this is not just a set and forget market. There's a lot of cheap stocks out there, and if data starts getting positive, they're going to get bought up very, very quickly, especially in the US. There's a lot of these sort of tech stocks, good stocks like Microsoft, that are very cheap down here. Okay. There's a lot of good stocks on our market that are still very, very cheap, but their outlook is uncertain. Okay. And those stocks are dangerous still with this uncertain outlook. All right. So to me, this is a trading market at the moment, loving the short term bursts of volatility, trading those bursts of volatility. But from a long term perspective, be happy to take profits, pull out, have some powder dry, ready if it does fall again. That's my attitude towards it. So allocation to cash, get that cash goes in and out of the market in the short term, while my core positions just sit there, and their core positions I never sell because I've got at such good levels, getting great dividends. That's how I'm managing my portfolio at the moment, guys, right? From an investing standpoint. Core positions sit there, 40% cash coming in and out of the market as I please. And then obviously my trading side of things is usually short term in nature anyway, right? But loving that short term trading at the moment. All right, so that's where we're at, guys. Okay, I hope that sort of summarizes what's happening out there. I hope you have a great week. Catch you all next week. Bye for now.